Kritika, thank you for joining us this morning. And now, of course, before we dive into a lot more details about what is unfolding, let me take the opportunity to also go across to my guest who's joining me this morning, Sharmila Velan, a global macro geopolitical strategist, Westbourne Research Services. Sharmila, a very good morning. Thank you for taking the time out and joining us here on Mirror Now. Today is, of course, the D-Day, and there will be a lot of insights that you would want to share with us. Having said that, my first question to you would be, given rising geopolitical tensions and slowing global growth, how do you see India positioning itself in this budget? Should we expect a shift towards more protectionist policies or an emphasis on integrating deeper into global trade networks, that is?
In this budget, India should be positioning itself as pro-growth. The government's drive should be about creating the economic, regulatory, and tax incentives to stimulate private investment as well as attract foreign direct investment. This is an opportunity for India to showcase herself as the place for global manufacturers to relocate and hedge against rising US-China tensions as well as Trump's war on trade. I mean, India's got loads of advantages. Its leverage is the size of the domestic market. It's growing middle class. It's a low-cost manufacturing production hub. Bottom line is that India shouldn't be getting into any kind of trade war or introducing any protectionist measures. On the contrary, it should be looking to see how it can integrate businesses and the Indian economy into the global trade market more closely.
All right, Sharmila, as you share those opening remarks, let me ask you this. With regional elections omnipresent in India, there's always pressure to balance fiscal prudence with populist spending. So how do you expect the government to navigate this tightrope? And what signals should investors watch out for in terms of long-term economic stability?
The government's in a difficult position, right? The economy has been slowing for the last 3 quarters. If you look at disaggregated data, you can see it's very much being driven by consumption and private investment spending. Again, if you look at imports, they've been slowing, and that's important because imports are a leading indicator of domestic demand. And at home, you're seeing it. It's the high cost of living and stagnant wages and high unemployment that is dampening consumption spending, and it's also a source of a lot of understandable angst among the electorate. The government's got a bit more fiscal headroom if, as expected, the budget deficit for the fiscal year that's ending comes in under the projections, but it needs to use it quite prudently, and I rather suspect the government will be very much focused on measures that help stimulate growth as well as employment in particular. For investors, what should they be looking at? What investors will be looking at is, does the government still maintain fiscal prudence, or does it give way to populist spending pressures because of the regional elections? Investors are also looking at what's happening to the Indian business cycle, in particular, what's happening to corporate profits, private investment, and lastly and not least, RBI monetary policy. When is the RBI going to start easing interest rates?
All right, Sharmila. So as you put that, a lot of challenges as well, but I will come back to you as far as more concerning how you look at this is concerned. But let me also take the opportunity to cut across to all my guests who join me this morning. I have Rakesh Nangia, Chairman of the Nangia Andersen India Pvt Ltd, joining me from the studios this morning. Thank you very much for taking the time out. I'm also being joined in by Jagdish Shettikar, Senior Economist, former member, Prime Minister's Economic Advisory Council. I also have with me this morning Haresh Karamchandani, Karamchandani, MD and Group CEO hyphen Foods. And I also have S. Ravi, founder Ravirajan and Co. and former chairman BSE joining us this morning. I'm given to understand Professor Nilanjan Banik, senior economist, professor and program director also joins me, and Rajat Bose, a partner Shardul Amarchand Mangaldas and Company also joining us. All of you, thank you very much for taking the time out and being extremely patient while I come to you. I'm going to come back to you in a couple of minutes, so continue to be patient while we, of course, would love to know your insights as to what our viewers can also expect from the Union Budget 2025. But quickly cutting across back to Sharmila about this. Sharmila, having said that, with what you did put into perspective earlier, the government, of course, has consistently pushed infrastructure spending, but private sector investment has lagged. What measures could the budget introduce to crowd in private investment, and what role do you see foreign capital playing in this?
In an ideal world, the government should be cutting the corporate tax rate. But the question is, how much headroom do they have to do that? And if it's, I rather suspect, if it's a choice between cutting the corporate tax rate and the income tax rate, they will go for the latter. So it's about what can they do in terms of targeted tax incentives as well as tariff reductions for sectors that are job generating, sectors that private investors and foreign investors are interested in. That is the tech sectors, the telecom sectors, and also the capital goods sectors. Other options are what one would hope to see is that an expansion of the production-linked incentive scheme, particularly to the subcomponent areas, and whether they are able to deregulate some of the other sectors, including insurance, healthcare, and increase fertilizer subsidies also.
All right, and having said that, with the Fed's stance on rate cuts uncertain and, of course, global oil prices remaining volatile, how vulnerable is India's macroeconomic position? What policy levers does the government have to safeguard, that is, growth, while keeping inflation and currency risks in check, Sharmila?
Now, India, of course, is vulnerable to external headwinds, but it's less vulnerable than a lot of countries and regions, including, Mexico, Canada, China, as well as Europe. And this is because India is mostly a domestic driven economy. Exports just account for about 22% of GDP, and this compares with 30-35%, which is the average for a lot of Asian countries. But as I said, it is still where it is still vulnerable, and where it is vulnerable is capital flight, and that's what we've seen in the last few months with the stock market correction and foreign sell-off. In terms of policy levers, what can India do? On the fiscal front, unless the government totally abandons fiscal prudence, which is not advisable, their fiscal maneuverability is quite limited. It is the RBI, the central bank, that has got the policy levers. The RBI has been very focused on inflation, and rightly so. But inflation has started to ease in the last 2 months. Inflation is now running at about 5.3% year on year as of December last year. Also, private credit growth has slowed very dramatically. It's actually halved and is now growing at about 10% year on year. And that's because of the tightening measures that RBI introduced last year to rein in
all right, Sharmila, I'd have to interject you over there, but thank you very much for joining us this morning and sharing with us your perspective. Having said that, we continue to track what different perceptions, insights, and of course perspectives are also concerned as far as the union budget is concerned. So back to all our guests who join us and continue to stay with us, like I said previously as well. Mr. Ravi, let me begin with you. As a former BSE chairman, what immediate tax relief measures do you think that the government can take in the upcoming budget? This is to, of course, stimulate economic growth without compromising fiscal discipline.
So, first of all, good morning. And see, this budget is coming under it's in a situation where there are global headwinds, and the finance minister in her eighth budget will have to balance between fiscal prudence, strong headwinds, global headwinds, and also sort of catering to the lower middle and middle class, which is very imperative. You can see from the Prime Minister's statement itself. So they will be focusing on tax rationalization, which is a must. And I feel that this is going to be the first step that tax rationalization will move. We'll see towards moving towards direct tax code. That is another thing that I see. I see increase in the tax rates, decrease in tax rates, and increase in the slabs. So I see that rationalization happen. I also see labor reforms which will come in, because I'll see that means we can anticipate gratuity to be increased. That is what I feel. You will have sort of deregulation also happening in land reforms and in other manufacturing sector, so that, and especially in the MSME and SME segment, we will also, I presume, we will see a lot of liquidity credit guarantee scheme coming to the smaller sectors. So this is what I think the whole budget will be around. It will also clarify a little bit of ESOP. I also presume that on dividend tax, there will be uniformity. So these will be the measures that government will take without sacrificing too much on revenue and collections. GST, I see on the health insurance. I heard you say about health insurance, and also on affordable houses. So these are two factors which will come in: GST rationalization, decriminalization will also come into GST, so that the ease of doing business is also sort of established. This is my initial comment.
All right. As you make those opening remarks as well, I'm going to come back to you once again. But of course, Rakesh Nangia, Chairman of Nangia Andersen India Pvt. Ltd, joins me in the studios this morning. And in fact, he was telling me earlier, while we were putting that into perspective about what the wishes are, will that happen or not is a matter of time. But Mr. Nangia, how do you look at this? Ultimately, everybody is looking for relief. Will that happen or not? We will know. But more importantly, it is always the salaried middle class that gets affected the most.
See, it's the wishes, the horses everybody will ride. And when you have this tax policy with governing a country of 140 crores people actually, and with so many push, pull, dynamics, priorities, so it is very difficult to come to a stage when everyone is happy. But you see categorically something like what you talked about actually. You won't believe it's still only 6.5% of the people file their tax returns in India, right? And out of which, more than 65% have a non-taxable income. So you can say only 30% of the people have a taxable income. And now very big demographic changes which is seen it. As you see the people filing the return from 5 lakhs to 10 lakhs and 10 lakhs to 1 crore, that again constitute 20-25%. So there is a massive swelling of the middle age income group which has come actually. And how that is possible? Either the income has gone up high, it could be the stock market income, it could be the income from house property, and it could be the income you are bound to be complied now. So you cannot have run away with the government basically by not disclosing it. The government is capturing everything in AIS now, right? So there is a massive swelling, and the government, for them, this is a target audience for the government to see that they are given relief. So what I expect basically, lower people have to be looked after by the government. Let's accept it. So the basic limit exemption which you talk about, 5 lakhs, 7 lakhs, I personally believe there will be a good case where the government will push 7 to 10. There's a very likelihood you see the expansion, and 5 to 7 to 8 is a likelihood that will happen. You must realize that so many people go out of the network also once you raise the level like that. So government has to do a very fine balancing and tuning to say that the number of taxable SSC doesn't go down, but there is no burden also. And then you just mentioned about your standard deduction. No, this is again a very wishful list. The government has, but the point is, government will not give you anything on the old regime. Then you don't call it old. If they're going to change it, then how it is old actually. So government is not going to give you anything more. It's 72% of people are filing it. I won't be surprised. There's a sunset clause coming up where this will go away. The old regime may go away.
Right.
Because 72% are gone. Another 5, 7, 8, 10% will go this year. So what is left with it actually? The government gave a couple of more sunset clauses. Okay, 2 more years, we go away. There's a uniform, there's a lack of clumsiness. This is there, this is not there, this is there. I think that will vanish away basically.
Okay.
And you see the tax collection, which I was mentioning about it. 20 lakhs crore was raised basically, which is 19.5% more as compared to the previous year, on the gross basis, which is very, very high actually. And personal income tax is 60%, corporate is 40%. This is a very big change. So you see the number of middle income people who are earning income, who are filing income, corporate income would have paying less taxes. Earlier, corporate was more.
Right.
The personal income tax has gone to there. Personal income tax has gone up by 300% in the previous 8 years. See the importance of personal taxes plays a role, and I think so. You mentioned about HRA, you mentioned about NPC, you mentioned about ATC, standard deduction. In the old regime, nothing likely is going to come. Government may only give a basic exemption push basically, and they will not give you anything more on the old regime. I don't expect, then I will not call it an old regime actually.
All right.
This is a very important part. Nothing will happen on the capital gain. Government has tweaked capital gain a lot last year. You brought the long-term debt to 12%. Don't have a wish list. You can't change laws so often and frequently. And then you can't please everyone also. So long it is taking care of the macro level economy, so long taking the dominant part of the population of the country is concerned, so long as the middle age and lower middle age is catered and looked into, in that cases, I believe the government is then doing a good job. And see the economic survey. Let's see what a beautiful economic survey is there. Deregulation it talks about. It talks about growth of income actually. It talks about growth of taxes actually. It talks about infrastructure development. I think I am very optimistic. Let me tell you one thing. There will be a blockbuster budget. And just see the mood has swung in 3 days. There was a depression. We were depressed because of global reasons, because of the stock market falling. Today I think there's happiness basically. There's a positiveness coming up basically. Certainty coming up. There's some underlying statement coming from the government. Very positive statement coming out of it. So dominant part of the way, and again you have other political reasons actually.
Right.
So that could also be there, but the government will come up with a very soft budget.
Okay,
We will come with a good progressive budget, not a soft budget.
So your expectation is a blockbuster budget, is what I make of it, with a lot of optimism. How will the middle class and salaried class look in that perspective? Only a little while from now we will know. But Mr. Nangia, having said that, I'm going to take that point across to Haresh Karamchandani. Harish, how do you look at that? Of course, Mr. Nangia feels like, this is going to be a blockbuster, budget. But what are the primary expectations for your industry as well, while looking at perhaps more development for MSMEs?
Okay, so now, as we all move towards as a country to become, towards the goal of Viksit Bharat and becoming a developed nation. So these, coming years, the budget for the coming years, which includes 2025, becomes very, very important for us to, set the goal towards the stimulation for growth. So now here, I would like to talk about my sector, which is primarily into food processing. What happens here is that I would like to highlight that there is, to be able to reach that goal of Viksit Bharat, there is one sector which really needs to catch up speed, and which is the agriculture sector, which we all know around 60% of our population is relying on agriculture for their incomes. Now, a sector which can really boost the incomes of the farmers is the food processing sector, wherein value addition to agri produce can be not only made available to Indian consumers by reducing wastages and so on. There are a lot of areas where there is wastage in terms of production of while we produce a lot of fruits and vegetables. So that is one area. And secondly, the food processing sector also enables once the value addition is done, and then opportunities for exports are there. And the government of India also has been, talking about food processing as a sunrise sector. And on top of it, we also have aimed to, visualize that India can become the food basket of the world. So towards that, I think a renewed focus on this agriculture and food processing sector is to be taken, wherein, large-scale manufacturing and high-quality I would say processing equipment and so on and so forth needs to be promoted in a big way, because this is really going to directly benefit a huge part of our population. So overall, if I have to talk about the MSME sector in food processing, in the agriculture sector, in value addition of agri produce, there are a lot of MSMEs. But at the same time, even if you look at the large industries, it helps generate a lot of employment. I would say that this sector is probably one of the largest employment generators in the country. So the expectation is that there will be, like
Mr.
there has
Harish,
been in the previous
right.
years, there has been focus on this sector. So I'm sure that in this budget as well, there will be some new initiatives taken by the government to promote more for this sector.
To do that. All right. Okay. Professor Banik, taking all those points also across to you as to what panelists said, but if the tax structure has to be more equitable, according to you, what would be the top two, priority steps to be heading in that direction?
So let me take a cue from my previous speaker, because if you're looking at the MSME sector, they're employing close to 200 million population. And if you're talking about the agricultural sector, which anyway doesn't come under the ambit of tax, you have around 400 million population working there. Now, coming back to what is necessary at this point of time, if I'm talking about the growth of consumption, because consumption expenditure happens to be the most important component of GDP, the only way you can sustain consumption is to make sure that you are giving enough of incentive for the agricultural sector, for instance, building more food processing units, or for that matter, building more irrigational stuff like that. But for the MSME sector, what is most needed is somehow if we can address this, the big elephant in the room, which is the inverted duty structure. Now, what is being happening with the MSME sectors? They were importing the inputs for which the import duty was quite high. And I think the time has come for the government and for the finance minister to take into consideration that for the MSME sector to survive, not only you need access to finance, but what is also needed is somehow bring down the tariff on imported input. And that will ensure that not only the MSME sector is flourishing, you should also keep in mind that MSME sector are more into the labor-intensive mode of production. So at a time when, because of technology and because of automation, when the jobs are coming hard in terms of getting created, I think government should give more incentive in terms of reducing the inverted duty structure for the MSME sector, which will also help them to create employment opportunities. And again, if I look into the distribution of income, for India, you will find that almost 70% of our population are earning or having an income which is less than our per capita income, which is around 3,000 US dollar, which around put in rupee terms, between 240 to 250,000 rupees per capita per annum. Now, as I said, that 80%, because if you look into the India's working age population, we are talking about around 70% of 1.4 billion, which puts the number around 800 million, out of which 400 million are stuck in the low productive agricultural sector, and the remaining 200 million are with the MSME sector. So the government, because of this vital element of consumption expenditure to be sustained, what need to be done is somehow give incentive for both the agriculture and the MSME sector, so that the people, majority of our population, when we are talking in terms of percentage, we are talking about almost 70% of our population will get benefit if these two sectors are taken care of.
All right, fair enough. But let me also take that point across to Jagdish Shettigar. All right, before I take that question across, these are live visuals that we're getting for you. You can see Finance Minister Nirmala Sitharaman meeting President Draupadi Murmu. These are live visuals that we continue to show you. Of course, a lot of expectations today as far as the Union Budget 2025 is concerned. And we're, of course, looking at that 7-point citizens wish list that we put into perspective, which we've, of course, taken across to our panelists as well. But having said that, we look at live visuals on our screens at the moment from Rashtrapati Bhavan, where the Finance Minister Nirmala Sitharaman is briefing President Draupadi Murmu ahead of the Union Budget. The countdown, of course, has begun from a short while from now. We will be looking at her address the same, but these are live visuals that we're showing you, and the budget in her hand at the moment, where a lot of those aspirations will continue to remain till she, of course, announces what is in store. Having said that, Mr. Shettigar, coming to you, key areas that India should focus on? Like Harish said, with that particular idea of Viksit Bharat 2047, and with the current challenges that is there, not just for India but globally as well, how do you look at today's union budget? What are the expectations?
Of course, the government is supposed to roll out its roadmap on the 2047. It's a long-term.
All right, we seem to have run into a technical issue with the audio line. We'll get that fixed. Mr. Shetikar, if you can hear me, please go ahead. All right, okay, there is some sort of a technical issue. We'll try going across to him once again. But having said that, Mr. Nangia, given the aspect of, tax rebate, realistic tax widening, is that the ultimate solution? How do you look at that? A lot of it is also about how much headway is there as well.
I think it is a very mixed bag, and you cannot say this is right or this is right.
Okay.
Technically, both are right. And that is a fine tuning and balancing which the government has to do it. See, you cannot say with a country of 140 crores, you are still 6% of the people are paying. In developed country, are 50 to 75% people pay the taxes actually. But the good part is that you reach from 2% or 1% to 6%. Right? At the same time, with the government also has to do that with inflation, with the rise of income aspirations, with prosperity coming up, with seeing that lower status goes up higher. The government also has to tax them, but at the same time also have to give them back actually. It's a very mixed, it's not an easy solution. And then again, I said 50%, more than 65% of the people don't pay any taxes.
Right.
Right? So but you get a rebate. They are paying the taxes, but they rebate the tax payment is zero because they get a rebate of that. So it's not an easy solution what we are talking about. It's a very fine-tuned balancing, which is good, what is good for demographic point of view, what is good for the world point of view, what is good from the India point of view is good in terms of, even earlier you see from IF used to say that how many people are paying taxes or not. So no, that doesn't run anymore now. But easy, if you tell me for government to do it, it's a very tough fine balancing. There's a revenue issue, there's a fiscal deficit issue, there's a current account deficit issue, there's an inflation issue. So government will have to do a very fine line of tuning. And
all right,
balancing.
Fine line of tuning is what is perhaps needed for the hour. Having said that, Mr. Rajat Bose continues to stay with us. Mr. Bose, thank you very much for being so patient while I've given the opportunity now to come to you. What are your primary expectations in terms of how this is at the moment, given the aspect of course, that other question of will there be changes to GST as well? What are your thoughts on the same?
See, as far as GST is concerned, I think the major decisions are taken by the GST Council. So I'm not expecting too much of rate changes or any of these substantial changes to be brought into GST. Yes, from a directional standpoint, there are a couple of things which are important. One, of course, is how they want to do some rate rationalizations, because there is a lot of talk about it. The four slab rate structure, I feel, is getting very complicated day by day, and within that four slabs, now they are creating further classifications about how, depending upon how products are made or consumed or priced, so on and so forth. So I think that is something which the corporates are expecting some kind of a statement on that as to how they want to, or a sort of a roadmap as to how they want to go about it. That is number one. Second, on the GST front, I think they would be tweaking some of the regulations, procedures to make it easier for MSMEs and smaller businesses to comply with the GST regulations, more from a compliance standpoint. I think that is something which is expected from a GST perspective. However, from a customs law perspective, I feel that there are certain changes on the anvil. One, of course, is they would be tweaking on the rates for certain components, raw materials. They will be reducing those rates to give an impetus to manufacturing activities in India. They will also push up the rates on finished goods from a customs standpoint. And I feel that there may be some announcement on the PLI schemes as well. So these are some things with some of the changes which are expected.
All right, Mr. Bose, those are, of course, the changes that are expected in terms of how you're looking at it. We'll only know from live for now if that's going to be happening or not. I'm given to understand at the moment, while I come back to all our guests, T.S. Singh Dio, ex-member GST Council, is joining me on the broadcast. Mr. Dio, thank you very much for taking the time out and joining us here this morning. Given the aspect of a lot of aspirations, expectations from Union Budget 2025, more importantly, the conversation of GST reforms, we'll be looking at that. But let's start off at the back with how are you looking at what one can expect today? What do you make of it?
Good morning, ma'am. Thank you for having me join the show, and good morning to all your viewers. Well, as far as the GST aspect is concerned, there must be rationalization of rates. We have far too many slabs, 8 or 9 slabs, if we start from zero and the cess slabs, sin goods, etc. So that must be rationalized. With the collections going up and with more and more people apparently coming into the GST net, its contribution to the revenue of the central government has gone beyond the direct tax contribution. So it is time where rationalization must set in, and a net neutral rate of say around 14 or 15 should be ensured through maybe 2 slabs, at most 3 slabs. So that is one. And GST must also look into technological use of digital and IT platforms to ensure lack of seepages. What is seeping through the GST net, that must be ensured. So you can collect more from more people and reduce the rates. So that GST must ensure.
Mr. Deo, as you pointed out, and of course challenges and loopholes in the current system, will that improve or not? We will know from a while from now. But having said that, the goal of Viksit Bharat 2047 with the current situation, not just for the nation, but globally speaking as well, how do you look at, the government also navigate this?
See, we must be very clear that giving irrational and irresponsible goals is misleading the people of the country. As far as I am concerned, minimum developed nation status would come around at about $12,500 per person annually. We are at about 2,500 today. So by 2047, there is no way in which we could reach that goal of 12,500 unless something comes from the stars. It is not going to happen. So we must not mislead the people. Our target should be double our annual per capita income by 2047. That would be a big achievement if we are able to do that. We are a huge population country. We have limited resources. We have limited production. We have limited takeoff. Our demand is not so much. So a lot of concentration needs to be done on exports. One aspect for manufacturing would be meeting domestic demand, which would have its limitations. The other aspect has to be, if you want to create more wealth, exports. So what the government is going to do to achieve $5,000 annual income by 2047 is the goal we should be. We must not mislead the people of our country.
All right, Mr. Dio. So you say these are unrealistic goals, perhaps irresponsible goals, because the focus here should be doubling the annual per capita income. And like you said, will that realistically happen or not? That happens or not. But Mr. Dio, thank you very much for taking the time out and joining us here this morning on Mirror Now. Having said that, we're slipping into a quick break. But before that, let me also tell our viewers that Priya Chetty Rajgopal, Managing Partner, Multiversal Advisory, as well as CA Kapil Mittal, Tax Expert, have also joined me this morning. Thank you, both of you, for being so patient. But we're slipping into a quick break. So we're going to come back to you as far as your perspective is concerned. So don't go anywhere. We're going to be right back. All right, welcome back. We continue to discuss about the expectations as far as the Union Budget 2025 is concerned. Before we went into the break, I did state about two of our other guests also joining me, Priya Chetty Rajgopal as well as CA Kapil Mittal. But we're also looking at that particular moment of the Dahi Chini moment of President Draupadi Murmu and Finance Minister Nirmala Sitharaman. Mr. Mittal, let me come to you quickly. Again, you and Priya have been extremely patient and we're appreciative of the same. Having said that, question about relief, tax rebate, tax widening, realistic, or is there headway for it? What are the expectations?
Manvita, as we all know, Indian economy is very down currently. In the last 4 months, we see a very extensive outflow by the FIIs. Manufacturing is very down currently, and there are global pressure also. We see the Trump, which is heading towards imposing a more tariff towards India and some other countries. So, from that perspective, we see that. Nirmala ma'am has to focus on how they can give money in the hands of individual, along with how they can balance with the Trump policies and some other factors. So what we see from the individual perspective, as we have seen in the last few years, government had introduced a new tax regime. In the new tax regime, earlier it was not beneficial for the individual, but in the last year, they did some changes through which the ITR, which has been filed in the last year, has been filed 72% in the new tax regime. There are chances that the government is planning to give away with the old tax regime, but this cannot be done right away because there are many other sectors which are linked with those old tax regime, like we know LIC and then Mediclaim and then housing deduction, which we are getting in the old tax regime. So what we feel and what we see from the perspective of giving some tax benefit or some kind of additional income in the hands of an individual, we per se see that in the new tax regime, there are chances that they may increase further with respect to standard deduction, which was last year increased to 75. Now they may go up
Mr.
to
Mittal, I'd have to, in fact,
1 lakh.
Interject you there, but you're right. At the end of the day, that is the expectations. But we will know just a little while from now, will those, aspirations and dreams actually come true? But Priya, coming to you to have the final word. We've heard everybody on the show today with what they expect, and more importantly, like how we've continuously been focusing on the salaried middle class, which ultimately takes the hit. All in all, how do you look at it, and what are the realistic expectations one should have, given how Mr. Mittal was also talking about global challenges as well?
Thank you so much for having me on the show. I'm looking at it, since we are not at an election year. There's going to be, I think, a lot more, a lot flatter in terms of expectations, a lot more realism, and tough things that probably need to be done. But some of the things that I would look at, and I think you would appreciate that I wear multiple hats. I run a company which is focused on services. I am part of Heritage Beku, which is a NGO and animal welfare group as well. I am on the board of TIE, so there's a lot of information, or was on the board of TIE, so there's a lot of focus on startups. So I have very different expectations, and I just want to cover them quickly. There must be continued incentives, which I'm hoping for startups and women-owned businesses as growth triggers. And growth triggers are important considering the global environment in which we live in. And this is especially on tier 2 and tier 3 towns. I'm also hoping that the impact of artificial intelligence in terms of both energy, in terms of impact, has to be calibrated, has to be addressed first and, positively addressed, but also calibrated against the potential loss of jobs and other, rippling effects that may happen. Definitely, we need simplification of taxes, as some of my panel colleagues have already mentioned, and GST. And the focus, I think, has to come back a little bit more on sustainability, public transportation, and one more thing, which is the ensuring equitable state allocations cutting across party lines. So Karnataka, does tend to suffer a little bit on implementation because we are not center aligned. Personally, and this is something which has affected our business and certainly something that I would like to focus on, is that we have an unrealistically high percentage of tax on recruitment services, which is 18%, which really needs to be rationalized because this is a space that's growing and has high global impact. It is quite, it can go across countries, can earn a lot of revenue. So the GST on recruitment services should perhaps be rationalized to a more acceptable,
Priya, although
maybe
you're
12%
getting us
kind of
those
number.
insightful perspectives, and I do agree with you in terms of the fact that you do wear multiple hats, because on multiple occasions we've spoken about the Bengaluru Connect as well. Having said that, Priya, I have to interject you with there. We continue to look at live visuals on our screens at the moment with the fact that Finance Minister has left from Rashtrapati Bhavan. All right, having said that, I want to thank Rakesh Nangia, Jagdish Shettigar, Haresh Karamchandani, S. Ravi, Professor Banik, Priya Chetty Rajgopal, as well as Rajat Bose and CA Kapil Mittal, all of you for taking the time out and joining us here this morning. We leave the conversation at that, but here on Mirror Now, we continue to track everything that you need to know as far as the Union Budget 2025 is concerned. Mirror Now's Executive Editor, Shreya Dhondia, joins you on the other side. Stay tuned.